Hello, everybody out there in Web3 land. I'm Pete Townsend, MD of the Launchpool Web3 Techstars Accelerator program. I'm here with Joey Krug from Pantera Capital. Hey, Joey.
Hey, thanks for having me.
Awesome. Great to have you on today. This is our fourth Web3 Convo Series fireside chat that we're doing here, getting everybody all thinking about the Web3 space and what's going on in the Web3 space and really bringing the mind of the mentor to the masses before we kick off this program in April of next year. So thanks to everybody in the crowd so far for joining. What we're going to do is Joey and I are going to have a chat for probably about a half hour, and then we'll get into the questions that you guys all have. And so please go ahead and drop them into the ask a question box that you see at the bottom of your screen there, and we'll do our best to address them. So just to give a bit of info there on Joey Krug and Pantera Capital before I hand it over to Joey to kind of walk us through things. Pantera Capital is the first institutional investment firm focused exclusively on Bitcoin, other digital currencies, and companies in the blockchain tech ecosystem. One of the first venture firms that I came across when I stepped into this space back in 2016. So pleasure to be on here with you today, Joey. Do you want to maybe share your backstory with us and how you got to this point?
Sure. Yeah, I got started in the space initially just through mining Bitcoin back in 2011, and then didn't really do a whole lot again until 2014 when I came across Ethereum, and I thought that Ethereum would be really transformative to the financial system and basically the way finance works, and so wanted to be a part of that however I could. Ended up kind of coming across this niche problem that needed solving, which is called the Oracle problem. It's like, how do you get data about the real world into the blockchain in a secure way? And so created one of the very first projects on top of Ethereum called Augur, which was basically a solution to that problem. And then we used that tech to basically build a peer-to-peer betting marketplace. And then kind of after that, fell down the rabbit hole of investing in early stage startups because people started reaching out to me for advice building on Ethereum. Because back then it was extraordinarily difficult to build on. When we started Augur, the programming language that you use on Ethereum was different. It was very primordial back in those days.
Absolutely. And your journey into Pantera, can you tell us a little bit how that unfolded and how that leads us up to today? Yeah.
Yeah, sure. So basically what started happening is, as I mentioned, companies started reaching out to me, right? And they started asking for advice both on the technical side, kind of game theory and economic side. The thing with these crypto systems is it's not like a traditional company where if your users do something bad, you can kind of just kick them off the platform. In crypto, you don't have that ability, which is I think one of the big benefits of the space. But it also makes things more difficult. You have to get the incentives really, really right. And if you make a single mistake, people will exploit that mistake to make money. It's kind of one of the most free and efficient markets in the world, I would say. And so people started reaching out, asking about that, and then also how to raise money from VCs. So a couple of the first projects that I worked with, one was Numerai, which is a quantitative hedge fund that also has a token that they use to incentivize their users to basically provide predictions that they then feed into models that they trade on the traditional equities markets. And then the other one was 0x, which was actually the first decentralized exchange. And so, I started basically helping those projects out. And that's actually how I met Pantera, is through 0x specifically. Paul from Pantera was interested in investing in it. And also, there were only 3 firms in the space at this time. There was, Pantera, Polychain, and Blockchain Capital. And I introduced them to all 3. And eventually all 3 ended up investing in that company. But that's how I initially met Paul at Pantera. And we just started talking, over the course of a number of months. He eventually looped Dan in, and Dan kind of explained that they're looking to bring in, someone as co-CIO and partner who had a technical background and kind of an operating background in the space, who'd been building stuff in the Ethereum space, because that's where they thought that a lot of the, cool developments and cool companies were starting to happen in the spaces was on Ethereum versus just kind of solely on Bitcoin like it was back in 2013 when the firm was started.
Yeah, I hear you. I mean, yeah, that was my entry point as well, because I read the Bitcoin white paper late, very late for somebody in the year 2014. And then I read the Ethereum white paper a year later, and that's what kind of got me going. It set me off. And yet Bitcoin will always be the originator, but it's the Ethereum unlocked so much more opportunity sets here with where this is all going. Being early in crypto, Joey, that's definitely impacting your outlook on Web3 and where you think this is all going versus someone who only went down the rabbit hole recently. Can you talk about that and about how being early has impacted your viewpoint on the world right now?
Yeah, I mean, I think like you think about like being early in this space. I mean, like it definitely like shapes your perspective of what's possible with the tech today and what's not. Like you see a lot of people say, oh, we should create like decentralized Uber or decentralized Facebook, and like that's a really 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 difficult computer science problem if you want to solve that problem today. Um, and and so I think that's one thing is like being early in the space, like you kind of see like what the actual limitations of it are, so you know what's realistic and what's feasible to invest in or not. I think the other is you kind of just see all the mistakes you can make, right? Like, it's mostly because I've made most of them myself at some point.
Mm.
Whether that's as a founder, I've made a ton of mistakes, or whether it's like as an investor, and then you can take those and then ideally not make the mistake again in the future. And there's a lot of like idiosyncrasies with this market, like the fact that valuations in the peak are often on the private side often 10 even 20 times higher than they are at the trough, and 5 to 10 times higher than they are during kind of like steady state. Is something that like you have to think about a lot, that I think like a lot of the new investors right now coming into the space, the kind of late stage growth funds, throwing billion and a half valuations on stuff that in the bear market would have struggled to raise at 60 million, and during like a steady state market in crypto would probably be fairly valued at maybe 150 200 million. And so like I think that's the other thing that it adds, like being early, like you've seen all the ups and downs of the cycles. And I've made the mistakes in the past of everyone feels like a genius when you're at the peak. And I'd
Yeah,
say like you don't want to feel like that. Basically, if you start feeling like that, kind of smack yourself and tell yourself that you should be more moderate when it comes to the prices you're paying for stuff, I would say.
absolutely. No, that what comes to mind is what Mike Tyson said is that everyone's got a plan until you get punched in the face.
Mm-hmm.
Right? And I guess if you've been in this early, you've taken a few more punches than most.
Yeah, that's for sure.
Very cool, very cool. And I in thinking about your role with Pantera, Joey, and kind of what you're looking for, and seeing this space move so quickly, what I've been talking to people about with regards to this accelerator program is that my own path had been a long path through finance for 20 years before I awoke, right? And saw where things were going. And naturally, I'm going to be looking for companies that might have had that same awakening and said, listen, I'm really inspired to do something and take what I know about the traditional financial markets and try to really digitalize them, for lack of a better word, and hyper supercharge that by building that on digital assets. And I've seen so many great applications out there of that already. What's happened since 2018 with that branch off of what had begun with CryptoKitties and whatever becomes of that in the Relic Museum, the virtual Relic Museum down the road, we'll see, right? But that where there's a lot more usefulness of this technology beyond what it was originally intended to do. And that cryptocurrency has been a fantastic 12-year proof of concept for the wider digitalization of finance, but it's also opened up a lot more channels and avenues. And since 2018, and seeing it branch off into how people spend their time in gaming, with media, with art, and I don't need to say NFT, but I will, right? And backing all that, coming from your angle of where you started all this, when you think about where this is headed, and I point to the book of Ready Player One, typically from
Mm-hmm.
time to time, to say, think about this 2045 scenario. The book, not the movie. I don't know if you read the book.
I haven't read it. No.
You haven't. Yeah, it's different than the movie. If you're smiling when I say Ready Player One, I'm assuming you've seen the movie.
Yeah.
I shut it off after about 45 minutes just because it was so different than the book, right? But anyway, when you're thinking about the future and where things are going, and thinking about crypto as being the basis for this and you being early in that, does that change your perspective at all with how you think about what's coming next and what you look for as an investor?
Yeah, it's an interesting question. I mean, I think like there's certain, I guess like the way I describe it is like, you know, you kind of see a few things. Like you see the same stuff play out in market cycles. I think, you know, if you've been in the space early, you've kind of see there's new things under the sun, but when it comes to like, you know, prices and valuations and like the phases that markets go through, there's not a whole lot that's new under the sun. Like I guess the way I would describe it is, you know, you mentioned like the kind of NFT and gaming and metaverse stuff that's happening right now. You know, like I think 2 years ago that was very uncool, and there were a few people doing it, and some of those companies became massive businesses, right? Like Flow and the people around that
Yeah.
project, you know, have been super successful with all the NBA Top Shot stuff they've done. Even though like CryptoKitties is like nobody really, I mean, sure some people use it, but like not that many people use it, but
No.
NBA Top Shot's a success, right? And so I think like then if you look at the space now, you have this huge influx of companies, and I'd say it's similar to the ICO boom. You know, you have a few percent that are really really great, and then you have a lot that are people just kind of coming into the space, you know, trying to make a quick buck because it's the thing that's hot. So I think like that's one thing that kind of, you know, colors your perspective, I guess, if you've been in the space a long time. I think another thing is just like trying to have like a decent eye for like what infrastructure needs to be built. Um, like I remember what surrounding like DeFi, you know, there's a lot of stuff that we invested in that you know was obvious to us that was going to be really needed infrastructure that wasn't necessarily obvious to other investors. I think for me that was because I faced the problems as a developer like in the past. Like we invested in this company called Alchemy that's doing like,
Mm.
you know, ETH node as a service, and we tried to build those at Augur, and we did, and they were a huge pain. We always kind of had to have 2 or 3 engineers focused on them, and they'd always go down. It was something where like I would happily outsource that to another company to solve that problem for me. Um, and so I think like when you've been using the stuff for a long time, you run into the problems that actual users face, which makes it easier to know like what's good to invest in. Versus, I'd say if you just came into the space like a year ago, you know, you might hear an idea pitched and it sounds like a great idea, but it's actually something that no one would use for some simple reason, or it's something that like it's useful, but like nobody in the space would ever pay for that because like the user mentality is I don't want to pay for XYZ. Um, and so I think it's kind of like the softer stuff like that it gives you an edge on. I don't think it tells you too much about like where the future's going.
Yeah.
You know, I think like maybe a little bit, but not much. It's mostly just like knowing what things make sense in a given market regime, I think.
Yeah, I hear you. We were talking to Matthew Graham, Matty, as he's referred to on Twitter, last week from Sino Global Capital, and he said, "Listen, there's probably a handful of visionaries out in the world, and Balaji Srinivasan may be one of them, but that don't be a visionary because you get stuck in your own narrative, and you get
Yeah.
stuck in you're going to miss stuff, right? If you have this rigidity to how you look at the world and what you think is going to come." Right now, I
Hmm.
can throw Ready Player One out there and half-heartedly, whatever. But I hear you that you can't. It no one has a crystal ball, right? So
Hmm.
just use your knowledge and use your experience and the things that you've been through to really look for things that you think may be successful, rather than try to be too future-looking. I get that. In thinking, Joey, about the things that that you guys do at Pantera to really help increase the odds of success of the projects that you're working with. I picked up on something that you put up on Twitter, and it was just one comment on somebody else's thread, and this was Jason Choi from the digital asset VC, the Spartan Group, and where it was basically his thread on how not to raise money in crypto. You pointed to number 10 in Jason's thread as your favorite, which was basically, I'm going to paraphrase here, that reference checks with founders who worked with a VC are better than any VC's Twitter popularity contest, right? Where someone goes and looks at, oh, I'll take an investment from this VC because they've got X thousand followers on Twitter, right? Can you talk about how you and Pantera overall work together with founders after the check, right? And why it's important that you guys get that right?
Yeah, yeah, I love that guy's tweet because, you know, it's sort of the thing to me. It says is like, you know, would you rather have somebody who's actually like, you know, working to help you out, or somebody who's focused on, trying to get Twitter clout. And I think, like, for me as a founder, I'd certainly rather have the investor who's actually going to, spend some time with me and help me with my business. And so I think, like, when I think about, like, what can we do as investors, it depends on the project, but I'd say there's a handful of things that we help people out with. So one of them is just, like, general kind of like strategic advice and help that any startup would want. Like, an example might be, projects dealing with someone that they're trying to decide whether to fire someone, and they're kind of new founders and want advice on that. Or it could be like, even a seasoned founder, but they want help closing a candidate. They're trying to hire somebody from a FANG company or something, and they're a really senior product manager or designer, and they're sold on crypto. They want to be sure that the company they're going to join is going to be the one that dominates in that field. And they want to talk to someone who led the Series A to figure out, why do we put our money in that basket as opposed to any of their competitors. So I think that's like another example. The other kind of areas are more like hands-on stuff, like things like helping projects with technical things. Projects send us like a design or architecture, or like way they're planning to solve some incentive problem all the time, and ask us to look at it and see, do we think it actually makes sense? Do we see any kind of obvious holes in the design that people would try to attack if they actually shipped it, that sort of thing. And then I think the other kind of 2 or 3 areas are, another one is similar to the technical, but it's the flip side. It's like regulatory. The regulatory environment's very unclear and vague, especially for stuff in DeFi, or anything that's basically built on top of Ethereum. And so, in that area, it can be anything from like reviewing a legal memo their counsel sent, to like telling them, hey, like, your counsel clearly doesn't understand what you're building. You might need to get new counsel. Or just like referring them to the right person, that sort of thing. And then I think, like, the last kind of area is just like stuff that I would call like networking. And this is what my partner Paul is really good at. It's just like, if a product needs to talk to another product in the space, or they want to, raise money from a specific investor, whether they're in or outside of crypto, or they're anything like in that area. I think that's kind of the last area that we can add value. Also, because we have a lot of companies in our portfolio. So, if you're like, for instance, we're investors in Arbitrum. It's a layer 2 scaling protocol. And there's a ton of apps and decentralized apps that we've invested in that, are now building on Arbitrum. And like, so it like helps that those are in our portfolio, because it's like really easy to make the connection there. So I think, like, it's kind of a wide range of things. But it's basically like, I like that tweet because it's basically like, yeah, you can take someone's money for their brand, but like, it's also nice to be able to just, give them a text once in a while, or hop on the phone and ask them for their thoughts. And, it's better to have an investor who will actually pick up the phone.
Oh yeah, absolutely. I know that, and it's like you got to be there. And then you mentioned the network, right, and the connectivity and opening that up, and that that's one of the things that we put forward here with Techstars, is that it's the power of the network, the power of the mentors, everybody that we bring in, and once you connect your network with someone else's, and that person connects their network with someone else that you're working with, it just exponentializes things. And just case in point, so Johan Turpin from Wintermute Trading, he saw my tweet about us doing this session, and he saw the tweets about the session with Matty Graham from Sino, and he's like, "What, are you going through my cap table, Pete?" It's not a problem that you are, but and I said, "Listen, you get a great founding team, you're probably going to find great investors behind them, and you find great investors, you're going to find great founding teams within their portfolio, right? So it goes both ways. How do you? I mean, are there what's the best way that you follow in order to keep your connectivity alive with your colleagues out there in the VC space and the investor space, beyond Twitter, obviously?
Yeah, I mean, Twitter's great. I think also just like, and there's a lot of like various Telegram groups, although I don't check those very often, because like when I do, it's kind of it's a time sink. And so, I think I talked to a lot of people on Signal. I think it's just a great app, because like, there was one day a couple of years, maybe 2 or 3 years ago, when, I woke up and I had like, 200 something notifications on my phone, and I was just like, screw this, and turned off notifications basically for every single app except for my email app and Signal.
Okay.
And so now, like, I tell people, if you really want to reach me, ping me on Signal. Anything else, I'll eventually get to it, but like, I'll respond usually within seconds to minutes if it's on Signal. And so like people I share deals with, frequently, it's kind of a small handful, but that tends to be on Signal just because it's fast and it's easy and low overhead. Yeah.
Yeah, I hear you. Yeah, I know when you got to condense yourself into one small screen of being able to tell a story and get people interested in things, and well, like share deals, like you said, it's great to be able to do that short and quick.
Mm-hmm.
Absolutely. Uh, Beyond Pantera and Echo and Augur, where I know you still have some involvement there, I saw that you're an advisor to Telon, to Origin, Numerai, like you mentioned, Ampleforth, which were the first two tokens that I got for free through the Coinbase
Oh, interesting.
educational programs they were doing, and where it's like if you learn about these tokens, you get free tokens. So
Mm-hmm.
Numerai and Ampleforth were the first two that I did there. Um, and you're also a board member at Ether Capital. What's the approach that you take, Joey, as an advisor, as a and even a mentor in this space as well?
Yeah, I think like as an advisor, it depends on the project, right? So like for Numerai, with Xander, who was one of their kind of engineers at the time, him and we actually wrote their initial code base. This was like back in I think 2016, their initial Solidity code base. Um, these days obviously don't have that much time,
Mm-hmm.
but for something like Ampleforth, with them, it was mostly working on their initial spec, like for how like the design should work, for the currency itself. Um, something like Ether Capital, like there I'm mostly a board member, kind of just advising them on like general strategy, that sort of stuff. There's some kind of like internal products that they're working on, and I'm kind of giving them advice there. Um, can't say too much on that one because it's a public company, but um, yeah, I think it's sort of the same stuff that I help companies out that I'm invested in. The stuff I advise is kind of stuff that just like it's kind of organically happened over the years, where they kind of all just asked me if I'd be interested in advising them, and I said sure, because they're all founders that I really liked and enjoyed working with.
Gotcha. And do you find the balance of that being mostly technical and product led, or more commercial in terms of the questions that you're getting and the guidance that you give?
Yeah, it's a good question. I mean, in the early days, it was certainly very technical. I think these days it's more product led and kind of business led stuff. Like hey, we're thinking of fundraising. What valuation do you think is fair? Who should we talk to raise from? We have like this competitor who's doing XYZ, and we're trying to figure out if we should do the same thing or if we should do ABC instead. Like stuff like that. And then once in a while, people will still send me technical stuff, which is always fun because and that's how I got into the space. And I love looking at like if someone sends me like a you know designed to solve some game theory problem in their decentralized app, and they want my thoughts whether that's going to work or not. That
Oh
stuff is
yeah.
always super super fun to me to evaluate.
Yeah, I was just going to ask you because I know when people ask me questions and the types of questions I prefer to answer, you can tell that I prefer to answer it because I sit back and I start using my hands, right? And I'm moving my
Uh-huh.
hands around, even if we're on screen, obviously. And those that I don't, you'll see me more kind of sitting still. Is there a tell for Joey Krug when he's answering a question that he really likes?
Yeah, I'll probably kind of sit back and maybe look around a bit and think about it before I answer it. I think like for these like game theory ones, like there are often things you have to like you read something that somebody sends you, and then you're kind of usually you have one or two responses, right? Like one is like this isn't going to work and it's obvious and here's why, or it's like it seems like it could work, like I don't know, like, and then you go think about it in the shower, over the next week, and then you'll probably come up with something that is some issue that it may be a very theoretical issue, or it may be something where it's like a real issue that they should fix. um those problems are fun to think about because it's kind of like, I mean, it reminds me of like all the problems we solved early on at Augur. Like you're kind of just like, especially with the Oracle problem stuff, like you're just kind of constantly having to think through this incentive issue, that incentive issue. It requires a lot of focus too. Like often like somebody would walk up and talk to me, and then I'd be like, oh no, like I just lost this like mental palace of
Yeah,
game theory actors fighting each other, and now it's going to take like 3 hours to get back there, kind of thing.
just
um
in your own thinking in what's going on in
yeah,
your brain with this, the thought process and framework you're working through. I get that.
yeah, because it's like um because these systems are so complicated, right? Like they're very simple. Like Augur is like, a few thousand lines of code, but since it's on Ethereum and anyone anywhere in the world can access it and call any of the functions, um, it's really complex. Like the analogy I used this in a blog post I made it on the Pantera blog, but I said something like, writing smart contracts is like launching a rocket, but where the code is open source, and Russia and China can call any function on the rocket that they want. Oh, and NASA makes sure it's secure. And like that's literally the problem, right? And so it's really tough.
Wow, that is an awesome way to put it. I got to read that blog post, Joey. That's fantastic. Just thinking about where you kind of focus when you're looking at projects, right? What do you think are some of the leading indicators? If you're really early on something, what do you think of some of the leading indicators of what makes a high quality Web3 project?
Yeah, I think for me, I think it's like shipping velocity. I remember like projects that I've talked to who ship product quickly. They tend to be higher quality teams, and like even like so often a very early project, like you're not always going to have like a team with some like massive pedigree. And if you only invest in pedigreed teams, like you're going to miss out on a lot of the upside. Like if I think back through like the kind of like 75 to 100x investments I've made, very few of them or almost none of them had like the classic like, oh, two people who went to Stanford previously launched a
Mm.
startup and sold it, and it was great kind of thing. Like there are people who had good backgrounds, like, and who seemed smart, but like you didn't really know for certain how well they were going to execute. And
Yep.
so I think to me the highest signal is just like how fast is someone, like, say you meet a founder and it's really early, um, you talk to them a couple months later, and a couple months ago they told you they were going to build something. Have they built it the next time they come back? Like, or like, are they like, oh, actually, it's going to be 6 to 9 more months? That's like a good question, because it's like, well, how well calibrated are they internally for like whether they can like ship product, or actually do what they claim they're going to set out to do. Um, and then I think also like time to getting a product into the market is also a hugely strong indicator. Um, like we had this one company we invested in recently, and it's these founders of these two guys who, like, they were in college when we invested. They're like 18 or something, and it's a decentralized DeFi insurance protocol. And I talked to them, and like between like the meetings of like between me having the first call, me giving them the term sheet, and then us signing the deal, like they built like a huge amount of product in that time window. And then like by the time we had our second or third or maybe fourth um, you know weekly sync, they actually launched the product on mainnet. Like it was
Wow.
within a couple of months, maybe 2 to 4 months, maybe total time frame from when I first like met them and then invested, and then they launched, early this summer, something like that. And so that's like a really strong signal, and you don't even have traction data on that at that point, but that like they can ship product fast. And so I think that's my number one thing that I look for.
Okay, that's a great thing to look for. Just thinking about what we're looking at right now with this program, and that shout out to Shane from Launchpool and Alphabet. He's sharing thoughts in the last couple of weeks around how fast this space moves, and that in the traditional tech space it may be a year between someone's idea inception and when they close their seed round, and in Web3 that can be a month, that can be a few months, right?
Mm-hmm.
And that you really got to move quickly. For us, our program kicks off in Dublin at the beginning of April. And between now and April, for the companies that are applying right now for the program, a lot can happen, and a lot can happen very quickly. And so we're thinking about how we some of the signs from the early teams. And I had a great chat with what will hopefully be a founding team in Dublin the other day, and was 3 folks who got together and had done pretty well in the last year just trading in DeFi. And they said, I said, listen, you guys seem like you're clued into something. Where are you going to go with this? Like, we don't know yet. I said, well, take some time to figure it out and then come back to me. He came back to me the next day. He's like, I think we got a product. I said, okay. So that's exactly how early we want to be, is like those folks that don't know what they're building yet, right? Which is a really awesome place to play in this space. We do have the first question from a crowd on that note, which leads into this quite nicely. So, question from Patrick, who is saying, for a new token project, what's the best way to get your attention? Now, you've already said Signal, right? But that's kind of it's a different story. So Patrick is asking, deck, white paper, code, or once live?
Oh, that's an interesting question. Well, I mean, obviously, if something's live or even on a test network, that's amazing. I think outside of that, I mean, code is interesting. I mostly just look at code because I'm curious, and I'm interested to see like how high quality is it. It's not like I actually care what's in your code base. It's more just what's the style. And then I think, but it's not a super strong signal. I mean, I've invested in stuff that's 100x, and the code quality is not very good. It's so I'd say, but it's nice to see high quality code. But I'd say basically a live demo, something I can actually play around with, and then a deck are kind of the two things that are most important. White papers, that's like if like I'm super into it, and like later in the conversation, I'll read that and then like start bouncing ideas, around like on the design side. But it's not like a make or break thing. I don't really care too much about white papers. And then on that, like if you actually want to reach me, my email is just joey@panteracapital.com. So if anyone has anything to send, feel free to send it over.
I gotcha. No, that good answer to a good question. Question here, project for the future to invest in if this is allowed, right? I think we talked a little bit about having the crystal ball or not having the crystal ball. But anything come to mind where you're like, listen, I've thought about this problem that nobody else is solving yet. Someone were to solve this problem, it'd be something that would be pretty cool for you to look at.
Yeah, I mean, I think there's one or two. Well, actually, yeah, one or two that are pretty interesting. I think one is so if you're familiar with like the idea of like aggregators for decentralized exchanges, you give them your order and it routes it across all the dexes to get you the best price. There's also aggregators for lending. If I want to lend out, I can go to Yearn and it'll give me the best interest rate. There's not really any aggregators that have, traction, usage, or are like really live with a lot of like that people are aware of. And there's people working on it, but there's nothing like that's amazing yet, as far as I know, where you can borrow and get the best rate. And it will kind of automatically refinance you to get you the best rate. Like right now, I have a loan from Aave, and I don't know if I'm getting the best rate. Like Maker could be offering me better rates, Compound could be offering me better rates. I don't know. I'm not going to log on once a week to rebalance the thing. I don't care that much. But like, I would totally pay a little bit for someone to ensure that I get the best rate. So a borrowing aggregator, I think would be huge, especially as DeFi like takes off long term. So that's something that somebody who was like a great team, good product sense, I would totally invest in that.
I get that. I like that. Borrowing aggregator. Some of the stuff I'm seeing in DeFi is blowing my mind recently, like Centrifuge and I think it's their Tin Lake dApp. We're seeing some of the what's backing liquidity pools that they have up there, consumer credit, emerging market credit, invoices, financing, bringing these real world assets to DeFi, solving those problems. I think some of that is pretty cool stuff, and got to know those guys recently through Defactor, who are here in Dublin, which is a pretty cool company. We've got another question here from the crowd. Once you've got a demo and a deck, anything on an expected valuation range or a fundraising sweet spot, without getting into the numbers too much, but does that ring a bell at all for you in terms of some of the things you usually talk about, Joey?
Yeah, what can you repeat the question? Sorry, there's like housekeeping at my hotel door.
No problem at all. I can hear her in the background. That's awesome. Once you've seen the demo and you have a deck, is there a valuation range that you look for, or a fundraising sweet spot that kind of that you guys prefer?
Oh yeah, good question. So I mean, we tend to do seed, Series A, and I'd say Series B for the most part, round sizes. And once we've seen the deck and the demo, I think like valuation depends on depends how much money you're raising, depends what stage you're at, how much traction you have. I think are kind of the main few things. And for seed rounds, the range varies anywhere from in crypto these days, anywhere from 10 to, I'd say on the high end, 30 million for like a proper seed, not like a seed plus, we've already raised a seed and we're going to raise another round and still call it a seed thing that people do these days. Not that, like a regular seed round. Series A is anywhere from, I'd say 50 million to, it depends. If it's like a token project, it could go all the way up to 200 million, depending on what it is. And it may be live. There's a lot of projects that have a live product, but they don't have a token live yet. And so if you have a live product with a lot of traction, the token's not live, that can really boost your valuation up, right? Like that can start getting into Series B range where you're raising, 30 to $60 million and the valuations, on the order of 500 million kind of thing, if you have a lot of traction. So I think it just kind of, it's a wide range. I may have misunderstood the question. The question may have been like, should we put a valuation guidance range in our deck? And I would say, probably not. Like I would just put the amount you're raising.
No, I know. I coach founders on this as well, Joey. It's like you put that valuation range in your deck. You even say, listen, we're raising, 5 million. We're willing to give up X percent of the equity. You've given them the math already.
Yeah.
Right. And it's like you put that in there, it can either be offensively too high or unopportunistically too low.
Yeah, that's true.
By giving that away up front, it's kind of like, all right, let's just let the numbers work themselves out,
Mm-hmm.
I got it. We've got one more from the crowd. They're coming in with some good numbers now. So question is, what will it take to make crypto mainstream? Is this something you're interested in?
Yeah, I mean, what will it take to make crypto mainstream? I mean, I think it's just like the shortest answer of like time, right? It's like if you invented a time machine, I would certainly be interested in that. But I think like the real answer is like, like outside of that, like why is it going to take time? It's like, well, one, you have like a ton of UI UX problems to work out that are going to take a long time. Like I would say projects really only started hiring designers like in the last 18 months to 2 years. Before that you'd have teams and they'd be like, 7, 10, 15 engineers and like, not a single designer. And then like now projects are realizing that like, actually that's a bad idea. Like you should have like design people involved from the beginning. And so I think like fixing the design in the space is going to take a few years. And then the other problem that's unsolved, there's two other unsolved problems in my opinion. One is like scalability in terms of how it interacts with everything. So like you can go use Solana or you can go use Arbitrum and it's fast and fairly cheap. It's not easy to like interact between that and Ethereum and do all that quickly. It's not seamless. Mm-hmm. So fixing the UI UX challenges there is another thing. And I think the last thing is still the fiat on-ramp piece. If you're an investor, it's not a problem. But if you're someone who actually wants to use crypto, it's still not super, super easy to like get it. Like making a Coinbase account is still a lot of work to ask a user. I mean, it's like the same amount of work that eBay asked users to create a PayPal account back in the day. But like you look at Amazon, they never asked users to do that. And it's a much more seamless experience. And so I think like with crypto, eventually there'll be like widespread solutions. Like there's companies like Wire and MoonPay that let you do it today, but they're not kind of widespread yet. But they'll enable you to just input your debit card or connect your bank account with Plaid and buy crypto straight up in the app, never needing to go to a separate site. I think if you combine kind of the few things I mentioned, you kind of have the ingredients you need to go mainstream, where it's basically it's just easy to use. Yeah, that's the short version. Is it needs to be easier to use.
Yeah, it does. And it was Sam Bankman-Fried from FTX. I heard him recently talking about how let's not sell ourselves short here in the crypto space, because if you look at all the different things that go on when you open up a online brokerage account in traditional securities markets, you can't just go to Nasdaq.com and book a trade, right?
Right.
You got to do all these things, and then all of the different handoffs and intermediaries that are behind your trade. Compared to how we can have the settlement finality in crypto pretty quickly once you are in this space, once you're on board and once you're in. And it's that harder part that hopefully are things that people will keep working on and keep solving. And one of the other things on a related note to that, Joey, is that part of our thesis for the program is that the world will reach a tipping point of more crypto users than non-users of crypto within a certain number of years and perhaps a couple decades. But the pace of that can be quickened by the 250 to 300 trillion worth of financial wealth out there in the world becoming digital and moving into the digital asset space. And that's a much bigger enterprise level problem to tackle. And so we're looking for both. We're looking for those that are solving those problems, but also opening up Web3 from a future looking perspective. Have you thought about that all, about how quickly we could accelerate if there was some more adoption of digital assets at the institutional level, and where you think that might be going?
Yeah, I mean, I think on the institutional side, like, I mean, you have like one thing I was surprised to see earlier this year. I forget what it's called, but it's basically like, I'm gonna butcher it, but it's like the American Banking Association or some industry group for banks, right? And they published like a 50-page paper on DeFi, which I quickly skimmed. But it was basically saying that like banks need to like position ourselves with the regulators to ensure that we can actually adopt this tech. Otherwise, we're going to be like disrupted and basically non-exist, which was surprising to read from like an industry group that represents the bank's interests, because like it's not the same sort of rhetoric you saw from the music industry, in the mid 2000s, or the motion picture industry or anything else. So my read is that there will be probably a small number of banks and large institutions that adopts this tech, and they'll be the ones that are left. And then the vast majority are going to kind of fade away and be superseded by effectively tech companies. Because I think tech companies can do everything that banks can do better, cheaper, with less inefficiencies. And, they might partner with some banks just to get the kind of the regulatory apparatus, portion. And I think probably the banks that are left will maximize the fact that they have customer bases and probably either partner with startups, acquire startups, or just like, eventually plug into DeFi somehow. But it's like, it's not like anyone from the banking industry listening to this is going to be like, it's unrealistic and stupid. But I'm talking on like a 20-year horizon.
Yeah, totally.
Which I think on a 20-year horizon, it's not stupid.
It's got a long arc, and I was listening to Balaji on the Tim Ferriss show, and he said, 2040-ish, feels right for some of this stuff to happen. And I'm like, you got to be a visionary to say 2040-ish, but, question here, a couple of questions coming in as well. What aspects of a successful Web3 project do you think should be prioritized most in the early stages of development? Now, you talked about the ability to ship quickly and gets a good cadence of shipping product going. But are there, I was talking to someone earlier today who said, listen, what we have on they're building in Web3, they think that for their value proposition, that the blockchain protocol that they select is going to be less integral to them being able to move quickly, and it's how they adapt to the market conditions and how they gather customers that's going to be more critical. So they're spending and focusing all their time on that up front. We'll figure out the protocol side later, because they're not developing their own native protocol. They're building on these Lego blocks, right? So I've almost front loaded the answer for you there, but what do you think, should be prioritized most in the early stages of development?
Yeah, I mean, I think especially for Web3, which is the context of the question, I think like prioritize getting users, because like it's different than DeFi, right? Like DeFi, if you launch something centralized and then you decentralize it, like you're taking a massive legal risk in many cases, depending on what you're building. But for Web3, like for the most part, depending on what you're building, there are Web2 versions of it that exist, and it's not hard to like be compliant, and so I think like the way I describe it is like do the centralized thing first, get users, and like work on decentralizing it over time, because otherwise you'll build this great ivory tower basically, and then no one will use it, and you'll spend years solving all these research problems that then people don't actually end up using. So I think like my attitude towards it is get the users. You need to have some sort of ethos that gets users excited, of course, and then over time decentralize it, because like the decentralization stuff, it'll probably take you a couple of years. There's a lot of hard tech problems. Like it's not like an impossible thing. I mean, it depends on what you're building. If you told me today I want to build Facebook decentralized and I want to do it in 2 years, I could be like, yeah, it's impossible. But there's things where you could totally build them today.
Yeah, totally. Like I met Mihai Alizi, one of the Ethereum co-founders, a few years ago, and he was building Akasha, and Akasha was a very long project to basically build a decentralized social media um, platform. And they're still going. They're still going. They're doing some great things. And I know a few of the guys in Akasha here in Dublin. They're doing some fantastic things. But yeah, you're right. It's a long road. Couple of more questions here from the crowd. I'll go back to the ask a question box that we've got there. What's your take on NFTs beyond art? Any use cases to focus on?
That's a good question. I mean, I think like use case. I mean, like there's definitely a lot of interesting stuff happening in the gaming space with them. Um, I mean, like when I was younger, I used to play this game, Final Fantasy 11, which is like an MMO, and they have like an in-game auction house where you can buy and sell stuff. And there's no reason all those items couldn't be like, NFTs, for instance, where you could trade them in places outside the game. I think, NFTs outside art, it'll probably eventually long term be bigger outside art than in art. But it's really unclear to me how that plays out. Like I've heard people talk about, like someday, like, you'll buy a house and it's an NFT, like maybe decades from now. But I think it's really unclear how that space plays out to me. And like DeFi, like is a bit more obvious. Like even like from the beginning, it was a bit more obvious. Kind of like, like it's going to take every area of finance, basically decentralize it, remove the greedy old school middlemen, and replace it with a more efficient system. The way NFTs play out, NFTs are more like greenfield. They're not like some parallel to the existing world for the most part, which makes it interesting and far less obvious how it plays out.
Yeah, it does. It does. No, I know what you mean with DeFi, because when I read the Ethereum white paper and understood smart contracts, I saw, okay, let's remove these intermediaries. NFTs, when that first happened, I wasn't thinking about cats. I was thinking about, hey, where's this all going to go? I heard Chris Dixon speak about it, interestingly, on another podcast recently, and he said they're kind of like programmable websites, as if you own your own website. And we're kind of in the web 1.0 version of NFTs right now, in that they're kind of like read-only web way back in the days, but that they will move quickly and they will evolve quickly into read-write, as well as beyond, right? So but yeah, like we said, it's hard to have that crystal ball. Otherwise you get stuck in your own narrative. Any view on API 3 and oracles? It's a bit of a technical question, but is that something that you have any familiarity with?
Yeah, it's actually in our portfolio. So their approach is interesting. What they do is, and there's basically three main approaches to oracles. Quickly, because maybe this may be boring to some people, but basically you have like the augur model, which is like you have like a bunch of economic security where you're staking a bunch of capital, and if you're against the consensus, you lose your stake. It's sort of similar to proof of stake. Then you have the Chainlink model where you have a bunch of nodes and you have like maybe 10 of them, and they go ping an API like ESPN, and they get an outcome of a sporting event and they report it on chain. And if like those guys collude or whatever, like you're screwed, but like for the most part they don't. Sometimes they make mistakes though. And then you have the API 3 model, and that model is basically, okay, instead of either of these first two models, what if we like, I don't think they actually do this at ESPN, but I'm just using an example. What if we actually go to ESPN and say, hey, ESPN, will you like sign a cryptographic message that says that you said the sporting event, that the Yankees won the game? And if they convince people to say yes, then what they do is they basically broadcast that data on chain, and you have sort of canonical record from like the original source what actually happened. So that's their model. I think it's pretty interesting because like if you can convince people to do it, you kind of get data straight from the source versus having kind of these like economic solution or this kind of trust in numbers solution. And so it's fairly elegant. It's like a simple idea, but it's a good one.
Yeah, absolutely. No, dating myself, going back to 1996, doing things when I was with Fidelity Investments in Boston, in investment operations at an incredibly fast pace that still I haven't seen replicated yet today in the investment operation space. and where it was all based upon a direct feed of data from the exchange, right? And that was the closest and most trustable data that you get is right from the horse's mouth. And maybe getting sports scores and connecting IoT sensors to someone's bat to know when they're going to hit a home run or not, right? And using that as your direct source for data here. I think we got one last question here, and it's kind of one that's relevant for some of the stuff that I'm looking at as well, Joey, is that there are many new startups that this individual has spoken with. I can't see the name popping up there, Mike Shimanoff, that are trying to fit Web3 into their model where they really don't need to. Any insight on what you think is a right fit for Web3 or what perhaps is not a right fit for Web3? Should companies that exist in traditional spaces try to think about themselves and reinvent themselves into the Web3 space, or is that just let's let the organic digital projects lead it for us?
Yeah, it's a good question. I mean, I think companies certainly can, evolve to adopt it. Like if you think about, the thing we just talked about, it requires like a visionary CEO and stuff. But like if you think of the thing we talked about, maybe 10 minutes ago, where we were talking about how like it's probably ideal actually to build a centralized Web3 thing first and then decentralize it. Once you've got product market fit. I mean, if you're a traditional company and have the product market fit, it's going to be difficult, and half the company's going to hate you and get upset about it. But like, it's still far easier to take that product market fit and make it decentralized than it is to start decentralized and get that company's success. And so I think like it's totally plausible. I think the thing I think about it though is like you have to like really go kind of all in on it. You can't kind of like halfway do it. Like the stuff that Twitter's doing will be interesting to see how that plays out. They had like this decentralized Twitter thing. Like for it to really work, you kind of need like a truly open API. Like in the past, Twitter has been fairly aggressive about cutting people off their API when people use it in ways they didn't like. In fact, actually early on, most people probably don't remember this, but early on, Twitter actually had an API that was so open that people actually built tons of different Twitter apps on the iPhone. And a lot of those have kind of gotten removed or shut down because, they kind of hardened their API. And so it kind of requires going in the opposite direction if they want to decentralize it. And I don't know if it'll actually happen or not. But I think it's possible if somebody wanted to do it and was like serious about it. I think the thing that doesn't work is if you kind of do it half-heartedly, like if you do it as like a PR thing, then it doesn't, work long term.
Gotcha. I like that. That makes sense. Last question, and this one is for me, Joey, and I picked up on your bio, okay, and that on the Founders Pledge, right, and that saw you on the Founders Pledge website there, where it just for those that aren't familiar, that's where you donate a meaningful percentage of at your exit, right, at exit, and donate that to causes that would benefit from that, and that you said that some things are worth doing and have a high ROI, even though that return itself isn't monetizable. For these sorts of ventures, I believe philanthropy is a great complement to entrepreneurship. And I see you involved in a few things along those lines. Is that a meaningful part of your day-to-day?
I'd say not like day-to-day, but it's something I think about, a good amount. And I think like the way I describe it is I think there's things that are like worth funding, especially like certain types of basic research, where like the EV is very high, but it doesn't make sense to like start a company around it. Like, on that one in particular, I think when I said that, the thing I was thinking about that day is like battery research is one area I'm super interested in. Because you kind of have this like, problem where it's really tough to make better batteries. Like they do improve over time. There's like a battery equivalent of Moore's law, but it's not like crazy exponential. It's an improvement and it's steady progress, but it's not crazy. I think to get crazy improvements, you kind of need a massive innovation in battery tech. There hasn't really been one since lithium ion. There is this stuff people are doing. I forget the name of it. There's this startup that's created a new form of battery tech that's like, I'd say fairly late stage. They're like a Series C or Series D stage startup. And it's like a 50% improvement, something like that, in terms of capacity or how long the battery lasts. But, lithium ion over like its predecessor was a massive improvement. And so I think like that's an area where I'm interested in, where like, maybe it's a company that solves it, but like probably not. It's probably something where it eventually comes out of research, and then eventually it will become a company. A company will make it successful, but the initial research will come from a company. Kind of all the Moderna stuff actually with the mRNA vaccines is a good example of this. The initial research was I think government funded research. I believe at, I forget what university, but then it eventually spun out and became Moderna.
Absolutely. No, and thankfully they did, right? Because that's been beneficial for humanity, in addition to a number of others. Well, listen, Joey, we're gonna cut it there, and I just wanted to say thank you for joining this fireside chat, this Web3 Convo series that we're doing. Really appreciate you coming on board for this, and really looking forward to chatting with you more as we move towards going live with the program in April. So thank you again. Really appreciate it, and hope to talk to you soon.
Awesome. Thanks for having me.
Great. Goodbye, folks. Have a great night. Thank you for joining, and appreciate you hanging around.